Good morning, everybody. Monday. Happy Monday. Hopefully you've all had a good weekend. Testing, 1, 2, 3. Let me know in the Discord if we are all good. Changed some of the settings over the weekend, so we will hopefully audio sounds good. Just let me know, and if all good, we'll get ready. Perfect. Okay, so looking here on the NQ, I'm just going to look, since it's a new week, I am going to just zoom out onto the daily, just so we can see where we are. And I will just take off my indicators just for a second, just so we can see where we are. And what I will do, I will just switch over to the mini, just so the micro. Okay, so I just want to show you the daily, and then we will go down to the lower time frames. And what I'm actually going to do, just because I haven't done a breakdown for a while, we will we will just break it down in terms of where we are on this higher time frame extension. And it's important just because obviously that is what has been sending us much higher. So if we just zoom out, you can see we traded, if you look on the NQ, you'll see we had a halfway back that traded some time ago in 2020, and it went all the way into a same anchor new high, traded the 50. I know we've broken this extension down a lot, but just in case there's anyone new from the weekend or from the past weeks, this is important to tell you where we are. This completed on the 1st of July 2024, and we spent several months at that high, and you can see we actually ended up coming down after that, and that is where we ended up coming into what was the same anchor new high on the 38. So you can see this is the 38% retracement, and that is where we are. And I'm just going to remove these daily extensions just for now, and we can redo them at the same time. So this is your macro higher viewpoint sort of trend in terms of where we are, right? So we came down, and of course we've come back into what was previous highs, break above. Now we have retested that area. So you can see this is a break, and this is a retest of that same breakout point from resistance prior. Okay, and obviously those targets are 26,300s to the upside, and 31,800, and of course 37,000, which will get traded at some point in the near future. It could take 5 years, but at some point in the near future, it will get traded. So, but how does that help us for the time being? Obviously, it just helps us know that the trend is bullish, and of course the trend is most of the time always going to be bullish, but there are going to be months and weeks where we do have downtrends, okay, like we did have here, 3 months down, 2 months down, and of course that gives us our discount. Now, how do we view that, or how do we make use of that on a daily point of view? Well, of course, this was that same anchor new high on the daily, and once that gets traded 1, 2, 3 days, we then have a huge ATR to the upside, and that is signified by this candle here. Okay, you don't necessarily have to have the indicators on to see that. You can see this is a huge candle, and it breaks trend, right? It breaks the previous 1, 2, 3, 4 candle highs, and that is when we had the tweet from the president, and that is where the low has been. So this is your classic traditional extension. Okay, if any of you either have the masterclass or do not have the masterclass, this is absolute textbook. Okay, I don't think I've ever seen a daily extension be as technical as this to the upside, okay, in my whole career. I really don't think I have. Not on a daily point of view. Okay, on a weekly, monthly, yes, the ones that we've just shown, like these are just insanely technical. I mean, just look at this, right? Insanely technical. But on a daily point of view, this is just absolutely beautiful, and this is where I made pretty much, you know, $150,000 with just Top Step alone in all of this move, right? So I'm chilling now, and that's why you're okay if you've made money in all of this move here. You do not need to be chasing shorts or longs in any of this all-time high area. It's just a complete, in my opinion, sit on hands, or at least have much lower expectations than having down here, right? All of this, beautiful. Now we've completed a full negative 100, and we haven't yet traded. We traded the 23 down here, and then we did finally trade a high to high. Okay, that did trade the 38, 0 point drawdown, literally traded it to like within a couple points. completed the 23 on the 11th of June, and we didn't go same anchor new high. We kept that same extension, and that has pretty much completed there at 23,122s. Okay, where this level comes from. There we go. 23,123s is the high to high extension. Now, if we go into another high to high, obviously that is going to be very aggressive, but we still haven't even pulled back to those levels. Those levels would be 22,600s. And just remember, that is exactly what basically happened here. Okay, this would be identical if we actually do come down. Okay, do we know if it's going to bid like it did here? No, we don't know, but all we do know is it did here, and it did also here. So just following the trend, that would be a level to bid. And of course, if that fails, i.e. breaks and holds below that 62 of that draw, I would be waiting for a full same anchor new high on this draw here, and that would bring you back into this support down here, 21,700s down to 21,400s. Okay, and at some point at some point we are going to come down to a full halfway back, which will be, call it 20,000. Obviously, if we keep continuing to make new highs, this will get drawn up until we do finally come down to trade that halfway back. That isn't an extension I have on my chart for today or this week, because of course it's probably, well, most likely not going to trade. So what we have to do is we have to go down to the lower time frames, which is what we'll do now. And we have to see what extensions we are in and what ones are most likely to hold. Now, going back from last Thursday and last Friday, we're in the same draws. So I'm not going to break those extensions down. They are on the morning trade plan, so pay attention to those if you do want to see where they come from or where they initiate from. And we are still in the extension high from what is Tuesday, 24th of June, 3 a.m. anchor high. And that 38 has bid once, twice, 3 times, and it's actually where we ATR'd out of this morning. So you can see we broke it, ATR down, back above both of those ATR candles, and so far I don't like this to the long side at all, but so far you are holding Friday's lows. Now, I don't like this necessarily for a long, and I would much rather actually be a bear here, just because I don't think the dailies is actually bullish in any way, shape or form, in all honesty. As I always say, it's much easier to buy pullbacks in bullish markets as opposed to try and short in bullish markets. So much easier to be a long participant in a uptrend as opposed to trying to short an uptrend, right? This is an uptrend since the market is obviously gone straight up. So it would be much easier to buy discounts as opposed to short pullbacks, right? So I will just patiently wait, but I think the much cleaner setup would be if this halfway back that traded last Thursday or last Friday, if this halfway back does finally complete down into this 23 area, if that does happen, then I think what would be nice if we can get it would be a nice low to low in here. So that would be drawing from this low to whatever high we put in. And I really would like to see, if we do get it, you'd have to be quite bearish, but something like that. So you come up, reject into that 22,800s, and then you see continuation down into, which would be a full negative 100, down into maybe 22.6. And that actually lines up with your daily support. So if you zoom out, you'll see this 22,600 that I just spoke about, sorry, I keep having that drawing come on, is the daily support. That daily support lines up with that high to high. Go away. That lines up with that daily support there from that high to high, which is 22,600. And again, that comes from your anchor from the, should be from here, from the June the 11th. Why? That is, get this right, that is your, should be, yeah, should be there, 22,600. So that your anchor high from the previous high to high, which was on the 21st of May. That 22,600s is what lines up perfectly if we do get that short that I just mentioned, which would be basically completing this negative 22 from Friday. And once that completes, you then trade a low to low at 22,700, well, 22,800s, call it. That would then complete, hopefully, down to 22,600s. If that does happen, that would be absolute textbook for longs in terms of support. And that's why I think longs here are going to be very tricky, even though I did mention, obviously, that you've got that support from June 24th, 3 a.m. high from the overnight session, you're in there at the moment. So it's really, really, really tricky, in my opinion, to trade this because you've got support here at 22.8. So I really think you want to be breaking. And there's two confirmations here, because if you break the long support at 22.6, you could get something like this. So wait for 22.6 to break down here. You then get a push back up into that potential short area, call it 780s, then potentially come down. Again, I'm not going to short into this now because I don't know if this is going to complete, but so far that 61 has held, and there's nothing saying we can't actually come back up into the 50, fill the gap, come up into the 50, then finally complete. So there's a couple of draws on here, which we'll break down live on Discord throughout the day. But in short, it's not anything that I would be screaming about in terms of opportunity today. I think it's, with it being Monday, no scheduled news. Ranges on the day, as you can see, are 23,000 or just over, basically Friday's high. And to the downside, you are talking 22,650. So there is magnitude to the downside, which does coincide with that daily support. So gun to my head, I would rather the shorts, but again, just because I would prefer those doesn't mean they have to trade. But if we do get some sort of signal, which could even be a 50 to 50 here, which is what we've been reacting off from the overnight at that 61, I wouldn't mind. I really wouldn't mind trying to get, trying to break Friday's low and trying to get some sort of retracement short to follow this movement down. But of course, we will see how we play on the RTH session. I think this whole week will most likely be an RTH only type of session, so regular trading hours only. I don't think there's much edge at all trading the overnight session this week, just based on what I'm seeing. And if we go onto the daily, you can see the ATRs are currently 260. So the average true range on the daily is 260, which is extremely low. Okay, so opportunity just is not there to be trading overnight hours, in my opinion. So I will just stick to the RTH session and try to follow any extensions that are formed on the RTH and try and follow those either to the upside or to the downside. But support will be at 22,800s to the longs, and if you can hold those with this ATR to the upside, you're going to be testing right back up into Friday's highs, and you'll stay inside this range, or this weekly range from last week. But if you do finally get a crack of Friday's lows and you do start to sell off, then I would favor coming down into these daily supports. Okay, so I will leave you with that. Hopefully that was useful, and we will go on to Discord where we will trade live. Anyone on YouTube, click the link in the description below and you will be able to come up into the room. So